US markets fell sharply on Thursday. The S&P 500 fell 3.5%, the Dow Jones Industrial Average dropped 2.5%, and the Nasdaq Composite sank 4.3%. Following this, Asian markets also sank on Friday. Japan's Nikkei 225 share index fell 5.6%, Australia's S&P ASX 200 fell 1.3%, South Korea's Kospi fell 0.92%. But despite a turmoil in the global markets, Indian stock indices skyrocketed. Nifty 50 surged 1.7% during the trade on Friday to 22,788, while the Sensex climbed near 1,200 points to above 75,000 level. This came after US President Donald Trump declared a 90-day pause on 26% tariffs imposed on India. So, why is the Indian stock market rising despite a big fall in the global markets? Market experts suggest that the tariff pause is the main reason behind the rally in Indian stocks. Avinash Gorakshakar of Profit Mart Securities said that this rally is mainly driven by Trump's tariff pause for 90 days, excluding China. However, the important part in this tariff pause is an exemption for the Indian exports to the US, which has fueled buying on Dalal Street during the early morning session on Friday. The second reason for this rally is sell China and buy India rand. Avinash Gorakshakar of Profit Mart Securities said that the tariff pause has fueled sell China, buy India bets among the FIIs. While Sandeep Pandey of Basav Capital said that during the COVID pandemic, the world did see the havoc created by Chinese companies on semiconductor chip manufacturing, and we came to know that over-dependency on China can lead to disaster. The semiconductor chip manufacturing was deliberately halted to create an artificial chip shortage for the auto companies. Hence, the world is more comfortable with countries like India than a non-democratic country like China. The third reason quoted for the rally in Indian stocks is the RBI repo rate cut. The repo rate cut by 25 basis points announced by the Indian Central Bank is also playing into the minds of bulls. Anshul Jain of Lakshmi Shri Investment and Securities said that the market estimates that the 25 basis point rate cut and the accommodative stance adopted by the RBI in its recently concluded MPC meeting mean no liquidity shortage. This is also playing its role in today's stock market rally. The fourth reason is the short covering by bears. On Wednesday, the Indian stock market had ended lower and most of the global markets indices had experienced strong buying on Thursday. As a good number of short positions were left on Wednesday, bears immediately covered their short positions when the NSE and BSE opened today after the stock market holiday on Thursday. The fifth reason is buzz for a better fourth quarter result. Dalal Street is expecting better Q4 results for the Indian stock markets. Sandeep Pandey of Basav Capital said that after a 25 basis point cut by the RBI, the market expects strong Q4 earnings from the banking sector, which signals sustained industrial demand.